Hi everyone. We'll just give people a few minutes. I just kind of set this up for the last 15, 20 minutes into the close. We'll just kind of summarize everything that went on last night, overall weekly goals. I just posted it on Discord, so just give people a few seconds. I was pretty tired today. I wasn't planning on streaming today just because I streamed a lot this week, so my voice is kind of going away. Yeah, only 15 minutes till close, so we'll see what happens here. We'll just wait for a few more people to join, and then I'll turn this on. Honestly, Apple's one of the ones that caught me by surprise this morning too. Hold on. Okay, let me turn my screen on. And just confirm you guys can see the screen, and then we'll... There we go. This was extremely calculated yesterday. So I sent a template for Apple's annual ranges, which equated to these spots in here. And then I had started measuring in terms of like where they closed, okay, into the close, and where they had defined risk, and that was right at that 267.75, 267.99. The idea was if they had broken this interval here ahead of the close, which you can see they did, pretty close to 275, that's what would be linked directly to this 285.26. And I mean, this was pretty insane. They held these exact ranges. I think they held it honestly almost to the penny on this, and then they cleared, pushed above, stalled, and now they've kind of just been consolidating. So for something like Apple, you see how it pushed up to that 287.47. That was the next range. I've noticed that they've had the same exact interval here, okay, like roughly 33 to 21 cents in terms of where they're stalling. And I think a lot of that comes from this little break right here, okay. I don't know if you guys can see that. But in real time today, they did a really, really good job of sustaining this 2020 structure break, okay, off 278.17. Make sure you guys can hear me in here too. Okay. Okay. As for ES, so overnight conditions were pretty standard. I did send them, this is my crazier chart from yesterday, but overnight conditions were pretty standard. I did list just the base on here, but if you guys didn't capture that, I did send it last night and into the close, into this end of session stream. The basis was basically that we did the following. And a lot of people in here were so nice to kind of post their own tables for us. Okay, so I don't know if you guys can see this right in here. This was really clean because these are the 107, 110, 115 point extensions on like sustainment of 72.40, 72.43, 72.48. That's kind of what, and these would be the tick ranges. These are what they net. So that's where we still had somewhat of a range around like 73.07, 05, 06. Okay. This was Zabin's formation of it, so this is what this could essentially lead to, like that 72.64, and that's where they kept stalling last night. So there still are some odds for those ranges heading into next week. These were the spots that I had manually calculated last night, so, or not last night, ahead of the close, and that's kind of what we were watching for. So this is kind of the basis of where they had to sustain and where they had to kind of continue to break. 72.37 to 36 was our first major target, along with that 4-4 range. Okay, like kind of like this area in here. The 7238 was the first trigger. This area is what leads to expansions, okay? And we kind of just had the framework heading into this. Okay, this was the case if they wanted to come back digest, they would recycle range down back to like 72.14.22, which they avoided. If they don't want to digest, the idea was that they just basically push, okay, get these ranges, but then eventually can come back and retract to these areas here. So there was quite a bit going into this. But the main point was this, okay, and I did post this on Twitter. Okay, it's really this. If they held and avoided this digestive zone, you guys, like between 722232, specifically that 3744, then they would be on their way of getting that break directly to 55864. 7278 was the area that would continue that extension to 7300. And directly push to 7288, 7300. The exact ranges are like 7300.5, 7305, 7309. Okay, but this is just kind of like a base framework on that. And then I went ahead and I posted my session summary from last night. These were my notes. I did post these on Twitter. I don't know if anyone was looking for those, but this was very, very, very straightforward. Okay, so essentially if you hold this area here, this is what I said into close yesterday, and they avoid digestion, okay, in this area, like the 7228, 32, 37, okay, they're just gonna push. That's exactly what happened. Okay, I took my logic from yesterday before the close, and I input it into TradingView this morning just to kind of see, you know, like what this would entail, and it literally looked exactly how I drew this, and I posted that on Twitter this morning too. These were the full notes, okay, from my summary yesterday. Okay, this is when we were streaming yesterday and had those breaks at exactly 130, 131. This is the ladder for upside. Okay, so there's two odds that they had. It's either they sweep and don't digest and they continue to here, right? Or they come back and digest, and technically that's healthier for next week. So we still are going to eventually have to come back and digest this area at some point in time. It's just whether or not they wanted to continue extending this, okay, prior to getting that range, because the 7158 was a calculated hold off 7133 and 31. That was the initial break. This was that first initial overhead between 7205.08. 22 was the trigger, and if you watch yesterday's stream, we timed that pretty much exactly to that point in time and price. When I went ahead this morning and applied my logic into TradingView, it just kind of gave like a very base frame. Okay, and we already talked about this last week and 2 weeks ago, but 7188, 7193 break specifically last week is what keeps that 100-point extension in play, and they literally extended exactly 100 points from last week's highs. Let me just find it in here. I did post it this morning. This, okay, this is just a very, very, very basic input. I just kind of took my logic, okay, and I input it into TradingView. You see where they held last night? 72.37.44. You can see that initial break of 6.4, okay, especially right here. Then they pushed. Look at where they held in real time off that 7172, 78, and then they pushed it directly through 88 and 7300. So far right now, they're holding kind of in between, which is why they can have like this sort of not chop, but like basically sideways, because they've already met technically their max range. They don't really owe us much more than this, if that makes sense. So now heading into this, like you can see, overnight was very, very clean. Look at this sustainment of, this isn't a close, okay? This is at 3736. They open, They never came back beneath that range, okay? They did a really, really, really good job sustaining 4-4, and they tested 6-4 immediately. So the breaks of 6-4, 6-6 is kind of what guaranteed the breaks to 8-8 and 7,300. Okay, had they not done that and specific ahead of open here, like you see the 4-4, 4-6 holds again, and then the 7-1 break just ahead of open here, I feel like had they broken 7-1 ahead of open, like maybe closer to 7-2, 7-8, we probably could have pushed to 73.05. I think that's where that reduction started coming in from. Okay, it was maybe like back here. Can you guys see that? And that's kind of been recycled throughout this theme. Even overnight, like 6-4 breaks here were good, but again, had they maybe pushed, you know, 6-9, do you see this? 7-2, okay, so, and I noticed that that ended up being a theme heading into this. This is likely why they ended up stalling here, okay, so, and that could have been an extended range closer to 73.05. These were my max ranges for the week. I didn't see us going much more above 73.05.25 and 73.09. So that action, I think, is partially why that happened. These slight stalls here, but even in real time, if you look at this opening break right here, okay, do you see how they immediately held right off open? Today's open 7-2-6-4. Is that a good open for core continuation? So think about it. This is another big factor to why price traded the way it did into today's session. What do you guys think? And real quickly here, so then we can kind of summarize the close. What do you guys think? Was that the best place for them to open that, or not too much? It's not a bad place. It's definitely not the best place though, okay? Had they opened maybe closer to 7-1, 7-2, you likely wouldn't have come back and revisited beneath this range. The fact that they opened in the means and right at that 6-4 calculated area implied that they could revisit this area in here, okay? 7-2, 5-2, 7-2, 5-8, 7-2, 6-4, okay? The positive this morning was they took out 7-2, 7-3 almost immediately. They didn't quite take out 7-8 though, okay? But then you see like the really, really nice structural holds here. It's kind of hard to see with everything on the chart, but this here, off 7-2, 7-1, okay? This was a really clean break directly to 8-8. Same sort of idea here though too, like even though they took out 8-8, okay, they didn't close above. Like, so some of these little tiny nuances, I think, were partially why they started recycling range back. Even though this was a really, really great trade, like, don't get me wrong. It's just, I'm showing you where there could have been some slight improvement. So maybe the opening range at 6-4 versus 7-1, 7-2, okay? The stall of 7-8 was good, but had they just continued to close and push, they did immediately off the second two sticks, but this, again, is another reason why they didn't continue much higher above that 300.75. These were really calculated ranges off yesterday's session opening range. Then they first proceeded, this was another offset that I noticed. Instead of sustaining off 7-8, they pushed down, okay? Had they sustained 8-8 here, initially they could have offset this and tried pushing again. They didn't, so they brought it back to 7-8. This little slight breach right here, okay, is another reason why they didn't push back, okay? Otherwise they could have had that break to 9-1, which would have been the same differential that they needed to kind of close back here, okay? It's like roughly 5 to 5.25 points. Do you see that? On these stalls. So then they pushed it back to 7-1, 7-2, which is okay, but the better structure break would have had to have looked something like this. Breaking to here, okay? And then that could give you an odd tap either held here, okay? Or if they had pushed it, you'd hold 7-8, okay? And then come back and break for them and make a better base. That's what would have allowed for some more constructive price action in the zone today. But again, they kept doing very, very similar PA. Do you see this? Again, another stall. That's the offset between the breach here means you're not going to get that extension here back to 7,300 highs. And that would continue to repeat because we're basically stuck within this range, which is at this point essentially between 7,252 and 7,300. So you can think of it as like you're above 7,244, 7,248 because that's the decision point, but you're beneath 7,305, 7,309, which was max range. Does that make sense? They kind of kept it so that you're like 5 points beneath and 5 points above. And that's kind of the inflection point that we're in right now, is between those very, very, very calculated spots near here and here. Okay? And here and here. And I'm not going to go over why 730509 were calculated again, because there's like hours worth of streams from yesterday and the day before and the day prior. But we won't really see a constructive break until one of these starts to trigger, okay? So I really wanted to see where they'd close if they end up holding that 5-8 spot. I figure that they probably would. It's not really a confined area. This puts us in an interesting position heading into next week because now we've entered both sides, right? So I already know that if they come back beneath 72, 48, 45, they're going to have to come back and digest this area here, okay? That wasn't digested. We have no digestion between those 20s and 30s. And that essentially is what could put risk back in play if they re-trigger 7205, which could trigger 7188, so on and so forth, okay? That's on downside. On upside, we do have some overhead here, but the continuation on these extensions was around 72, 25, 27. I have the exact charts from yesterday. And then we had some odds in the channel here. If we looked at this from a much wider standpoint, from using our 426 point intervals, so kind of like these ranges in here. May 4th, by the way, is a huge flip. This was the 10th bar. Okay, I want you guys to look at this. Do you see where they kind of took this to? So these hold and these breaks, pay attention to this. They haven't digested above there, correct? I think everyone would agree here. Have they digested above this range in here? Look, just pay attention. This is off calculated core ranges. Was there any digestion that took place in this range, basically, between here and here? Okay, this can be a future volatility risk, right? And this is specifically off of those very calculated intervals, okay? That's off the low from the 31st, which is linked to the 4th. Today's the final closing price of that specific date. When we look at this off, let's say, opening range instead, okay? So off of here. And remember, these are core ratios, so that's why we're using them. Otherwise, I wouldn't use them. And because the 13th and 14th were linked to the 31st. 13th was the final closing session off that 7-10 day frame that we were using. Okay. Hopefully this makes sense from here. If we measure off the exact range off the 8th, I feel like sometimes just measuring off the exact days is, some people just understand that more. Okay. This is where these ranges come into play. Do you see that? Off the high or close. Do you see this? I don't know if you guys can see that. Okay. Did they come back there in this session today? Around 72. It's roughly between 72.37 to 43.45, okay? But I'm just giving you guys a very quick rundown before the end of the week. No, okay? So what they've basically done is they've extended core expansion ratios of roughly 413, 427 points, okay? Those ranges are usually, like, base theory is like 430, but I mean, whether or not you want to use that is up to you. You could technically use 430 point ratios off of the full extension, I guess, if you're looking at it from like an open close to here. Do you see that? So from this kind of extension, we did look at 431, 429. So if we looked at it from a 430 point ratio, then okay, yes, you'd be closer to here. And I'm just telling you guys why these areas are important, okay? So from a 430 point ratio to 431 point ratio, that's more aligned to 7246.25 and 7247. Where did they hold last night? These exact ratios, correct? You guys can see that? The extension that's correlated with these breaks was basically another 33 to 34 points off like 462. Okay, so there's two ways you can look at this, whether you're measuring off the 17th flip date. Okay, there's two ways. You can either use the 462, which again is going to be close to these ratios here around the 7240s, or you can just apply the extension above. Extension above is where there's a lot of overhead. Does that make sense? So like here, 7310, this is where these spots come in from. Do you see that? That's why 09 is huge. Does that make sense? So as long as you can continue to hold 7240s, you're still in like a window between 7309.05. Okay? So 7309.25. That's the extension here. Where we had a lot of pinnable odds, okay, seemed very, very likely that they could stall off these ranges here. This is why, if you guys are listening, opening up around 7270s would have actually increased our probability. Do you see that? So I think that's where a lot of that reduction came into play. When looking at it from a closing range to here, do you see this? Look, from this open close range, open close ratio, roughly 431 points, it would have put some risk into close today around here. Okay, that's off an open close ratio. That means that your closing ratios are very much aligned to here. Does that make sense to you guys or no? And specifically on today's date, because today's the final closing price for that May 4th candle, which is linked to these days. Okay, so that's the only reason why you could technically use that. So on a 429 point ratio, then you'd be looking closer to here. And I hope this makes sense. I really wanted to try clicking. I said I would go over it one more time just so that you guys can see why, you know, these areas are important. Okay. So do we have extremely pinnable odds around this range in here? I would say yes. And if they can sustain that, then we have odds of basically rinsing and repeating into next week. What about for max range scenarios in terms of like where they stalled? For max range, and there was a lot of confluence around our mid bar here, okay, right here, which I know is kind of hard to see from the 10th and 9th. Do you see that? That's also 461. This is also 462, 461. So I know that these ranges are accurate. Okay, I know that they're not like off ranges or anything like that, especially when you're measuring like to the low range. Okay, do you see this? Can you see that? Do you guys see that? That's why there's like some mid confluence right around 7300. I really hope you guys can see this. And like this range here to that is 7300. So 7300 is essentially calculated off the low hold. It's not the max range though, but it is a calculated range. Okay, off the 9th and off the low. Do you understand this? This is a low to low ratio. So basically us hitting 7300 today, is that the best area for odds? No, because that's off a low. That's not off an open close ratio. Does that make sense? Like you have better odds of continuation when you're basically calculated off a open close ratio or a high ratio, but this is based on March 31st lows to that April 9th lows, okay? Off maybe some closing ratios, you had the odds of like coming right back down to here. Okay, this would be off closing ratios. If we looked at it from like the 461, 62, again, you can kind of see why the 70s played a very, very important role. And then when we did the final take off our April 9th and 10th, these were like the 414, 415, 426. That's where there was confluence around the zone. Okay, so around this area here. And that explains why holding 72.90, like I mentioned earlier. Like, I know we usually say zone is 6788, but I did mention it on Sunday and again on Monday and again yesterday that our actual calculated spots are closer to 72.90.50, 72.92. Same with the 7300s. Yes, there is some calculated range at 7300, but the more calculated spot is closer to 730509. So that's one major reason why. And if we looked at it from, again, like those extensions around like 431, 432, do you see that? There's a lot of overhead right in between this range here. Whereas if they fully extended and expanded, that's how you could get your 7320s, okay? Does that make sense? So heading into next week, make sure that you understand the correlation between these ranges, okay? So it's more about how structure starts to break. So once you form a better base, okay, around 72.43 and then around 72.92 and then 73.05, that's how you can get those, essentially like those clearance breaks. Okay, off of here, it's probably closer to like 73.21. This is just to give you guys an idea, okay? If we're looking at just base the 430 point ranges, then again, like I said, they would be right around here. For pinnable spots, again, it's right around this range in here. Okay. And you can see just how important these areas are, like the 43 to 47, 48 off those calculated ranges, okay? We did a lot of measurements off of our March 13th candle too, just because this was a very important flip date. And you can kind of see like the full range to yesterday. You see like how they did extend above 461, okay, by roughly like those 5 points. Okay, so this was a really good extension or continuation. They also broke 256 point intervals from here. This is if you want to go back and use like base theory. Like I said, you could use both. It just depends on whatever way you want to look at it. From a base theory approach, these were the 256 point breaks. Okay? Do you see that? Especially off these areas. And that's again why I think if they had broken maybe closer to the 73, 05, 10, 14, then there would have been a better structural base. These were also 346 point holds. Okay. I want to show you guys from multiple angles. We already talked about this early in the week, but this way you guys can have a better idea. So these are the 346 point holds heading into this. And how many points do you normally break if you hold 346 points? So if the exact ratio of 346.5 off our extremely calculated date on the 13th is 71.26. What's 71.26 plus 173? Which is half of 346. Because that would be your cleared move, basically, okay, off of these areas here. And that's where we had some calculated risk down to this week. That's why I said there is a slight odd that they could return back to the 20s. It wouldn't be the worst case scenario. It just would completely negate the probability of them actually getting this structure break. What's that ratio? It's right around here, is it not? If they broke 173 points off 2.6, you'd be left around here. Isn't that interesting? So that was like the core extension off here. Okay, that's off the opening range. Off low range, it's around that 356. Okay, 357 again. And if you notice that that's kind of where they had started opening, closing back in here, okay, until they cleared. So avoiding 7120s this week, is that a good thing or a bad thing? What do you guys think? Come on, I'm sticking around for after the close to go over this. So people that want to watch this on the weekend can go ahead. What do you think? Was not triggering 7120s a good thing or a bad thing? And if you wanted, you could use our exact ratios from our 21st, okay, 22nd. Those were the 7125, 22. It was good short term, okay. It could be bad in the future if they want to come back and digest the 20s, and if they fail 7188 again. Does that make sense? Because coming back and digesting here is good. We need to digest. But if they come back and fail structure around here again, that is what could reopen the window for 7122 and 7132. Does that make sense? So that could still end up coming back into play at a future date if they wanted to recycle range. If they don't, however, and they want to keep this going and continue and extend, and now we know that these areas are linked with 7320s and 7120s, okay? So, and they're linked with 256 point ratios, core ratios, and 346. If they continued here, what could that mean? That could just mean that you could get another 346 point move, correct? Isn't that what that means? Do you guys understand what I'm saying? So these areas, they're not just random spots, you guys. Like these are expansive spots, okay, that could basically trigger another core move, okay? I hope that makes sense, but and that's why I was saying, like, I wouldn't be entirely surprised if they did that off these ranges here. If we had like a 256 point move, again, that's another core move. That would be around 73.82, okay? Around this area in here. So just to kind of go over that from this basis. But I have been using core theory instead, so like the 413, 429 a lot more recently because these have been core breaks. Otherwise, then I obviously wouldn't really care too much to use that, but and they have worked pretty well, especially off like these ranges in here. You can see them from like the 15th, 14th. Okay, this is off the 7, off the 6999, sorry, break. And again, this is another potential core theory to like 7421, which is a core area. Okay. But the basis of this week is seeing where you pinned. And I think that is honestly what's the most important, is these pinnable spots off of these ranges in here, where they sustained off these ranges in here. So if we measure back to our April 8th flip date, do you see it? I know this is kind of hard to see, you guys, but do you see how they never, last week was kind of back and forth, because do you see how they were kind of going back between the 413, 396, 390? Do you guys see that? So if you pay attention here, look. Okay. You see these ranges, especially off lows? Do you see that? Okay. What improved that past week? Like, do you see this? 381, 394, 407. If we did the same sort of thing off our April 8th lows, look, last week, do you see how they were kind of just buffering around those same ranges? Look, 413, 496, 433, 432. And then when they started finally breaking, closing above these, that's when they had obviously these bigger breaks, 461, 474, right? Off these breaks here, we already looked at this. Okay, off open close, do you see this? When they initially broke, 475, do you see that? 478, look at this, off lows and close, look. This is an open close ratio. That's the open. Look at these closing points. 475, 463, that's 61. That's when it started coming back beneath 60, so they took it lower. 475, 474, then they broke. Do you see that? That's insane. If you can start understanding open close ratios, it makes a huge difference in how you interpret trading. Okay, so basically what they did here is they were kind of struggling in between those ratios. Once they finally came and cleared, and you can see here this week was basically them holding above those 430s. Okay, and then look, you guys, that's insane. I don't care how you look at this. This is crazy. Look, once they broke, can you see this? Okay, these are very important flip dates. Okay, especially April 8th and 13th. Do you see this? That's exactly 461 point open. Does that make sense, you guys? Like, I'm trying my best to explain this. It is pretty complex because this is calculated price. But they basically held exactly 461 points from today's open. Off the 8th, 461 points. And this isn't being scripted, so you might have to go back and rewatch this, but yeah, it's exact ratios, and that's basically a 33, 34 point extension off 421, 430, right? So that's what can allow for those expansions to continue. Off of the, let's say off of the closing ratio, so off of here. Okay, do you see how these areas here would have allowed for progression to occur and continued core to core? Do you see that? And then if we measure the full range, okay, we did hit more than 474, 478. So they're kind of keeping this in an area that's like, but off high range. So this is high to high ratio, okay, off a high range. Did we break 471 or 461, sorry? No, we didn't, right? That's why there's a lot more confluence around that 7309. Does that make sense? Because once you start doing that, then you fully have constructed a break over the 8th ranges, okay? And that would put you basically in a realm. And if you want to measure time, then that's up to you too. You can measure that. That would be like, that makes sense actually, because we were using 8.5 day intervals. So 22 to 21 day intervals, right? This is probably our 8 days. Yes, it is. This is probably our 8 days on this break, right around in here, okay, off the 16th, 17th. And I have been using 8.5 days, but could that not be what could keep pushing into mid Q2 from a time perspective now, okay? Ignore everything else from a time perspective now. May 8th, 10th, super important. The full basis would be what? A 22-day move. Does that make sense? And off of these ratios. So, this is kind of hard to see, but that way you can kind of understand it from this perspective from time, okay? From a structural basis, we already knew that like some of these structures flipped over. 30. This was the 28th through the 8th, our 10-day, okay, 31st, 14th, 28th, 12th. Our 7-day that we used a lot, 14th, 23rd, 4th, okay? We're using around an 8.5 day ratio, so we started measuring off the 31st and the 1st, okay, and then off the 8th and 13th and 14th. So when you're looking back at these, multiple flips on the 14th, okay, that means that the 13th closing range, correct? Does that make sense? This is linked to the 4th, so today's closing range. So that means the 13th and 14th are also linked to today's date, correct? When looking at it from like a time basis or a time theory. So this here. And I didn't fully measure that. I didn't actually see, but I would imagine that these were probably those 470, 474 ratios, okay? And then they probably pushed an extended range. Do you see that? And remember how I said that this day is more aligned with core ratios? Or not core ratios, like 346 point intervals? That makes sense. because this would be like the 346. Do you see that? 356, 375. To me, that makes sense. Off the closing range, you see how those are those 210, 207, 208. Do you see it? Those double core ratios here, and then they finally broke 214. Once they broke 214, they tried pushing 320 instead of 346, which would have been like right here. Okay, 373. Those usually are like core ratios, and 346 point ratios are two different things. So some of it's also aligned with time. So I did crack a code recently in terms of like, this is too complex. I'm not going to go over it right now, but that has helped me understand which dates are linked to which range. Does that make sense? So I did figure out that the 13th and 14th are probably more aligned with 14th are more aligned with 346, 375 point ratios. Okay, so that's something that's helped me a lot on this entire break, because then at that point I know exactly what to work with, because then at that point, okay, if that's the case, right, and they started holding like 157 and then they broke right in here. Okay, once you have a 173 point hold or something like that, and specific to these ranges, then that's when you could see the 173 point extension that we had talked about, right? So like 346, this is 346, do you see it? 179, 167, you know, and we'd be looking for 173, which is actually really insane if you think about it, because that's also where that reduction probably came into play, of like that 4 or 5 points. Isn't that crazy? So 173 minus 167, 6 points. And today they had those offsets all day. That's linked directly to the 13th, 14th, which is linked to today's date, because today's the final date ahead of our fourth flip. So that can help us set some conditions for Monday. Does that make sense? Because if you open, let's say, at here, then you're already like around that 73.05, 06, then you're already at an odd of getting that continuation. Okay, and that's what's linked to our 173 point ratios, which are the 346, which is linked to this. I know that's kind of confusing, and this is recorded so you guys can go back and watch, but this really was a very calculated week. I don't really know in what other way I'm supposed to put that, okay? Especially from like even just like the base holds here, okay? If you go back and look at this, okay, these base holds of like even our 346, 356, do you see this? Like if you zoom into this, that really is quite calculated, isn't it? Like look. And specifically from these lows, okay? Because we'd be measuring off lows, okay? Off open, off close. Do you see that? And once they kind of broke that 356, 357, that's really when things started to progress on this, okay? So I do think that this was a very interesting week. Where they closed here today, I think makes sense based on how they stalled. And then again, like we said, once you hit like those 430s, like look at this. They were kind of stuck in between. Once they started breaking 419, 420, 412, 430, and again, this is the 430, okay? 430, 430. Then they had that structure break. So there is absolutely nothing about this week that was a coincidence. I think it's all quite calculated. So it makes total sense that once they break 461, which they did, right? Because that was the next range, okay? Right here. That's where things start to become a bit not tricky, but why do you think that is? Okay, and this is just very dumbed down way of looking at this. Why do you think that is? Why would that then become tricky? And it's pretty obvious, but I want to see if you guys can try interpreting this on your own. Why would that potentially become tricky? What's something that stands out here? And we looked at this before, specifically off the March 31st candle, which was 230 points, 214 from that low to close, and around 182 to 198 from open close, open high ratio. Why do you guys think that would be the case? It's specifically because this, okay, how do I explain this? Let me try making this the easiest way to explain, okay? Right now, this is off, we're measuring this off of these open close ratios, correct? From here, yes? Everyone's like in agreement with that, with the 430, 431. Do you see this? Look. That's an open close ratio, right? Open close. Okay, that's off low. Open close. 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 Do you see it? Close. Close. That's the 430, 429, 431. These are closing ratios. Do you get it? I'll go over this 1,001 times if I have to so that you guys can try to understand this. This is a closing ratio, okay? Why? So 7240 is extremely calculated for close on a 7305, 7309 stall, okay? Does that make sense? Because had they pushed that, I know they got above 361, but that's not the point, okay? What's the bigger factor here? Because if that was the point, you'd be looking at off highs, okay? Off a high ratio. Off a high ratio, they did need a little bit higher. Do you see how they kind of broke it right in between? Okay, off this ratio here, same thing, 463, 461, okay? So you can kind of do the exact same thing, okay? Do you see that? You see how they kind of returned it back to those 407, 410, 414 off these ratios here? And especially if you bring it back down to this range in here. Okay, this is what can start putting these 460s back into play off that candle's low. Why do you guys think that's the case? Because if they start snapping these areas here, okay, and specifically like these big structure breaks and off highs, okay, highs, okay, that could do what to the market? Is there any range in between there? Between here and here? What do you guys think? Or here and here? Do you understand that if they take out 73, 09, 05, okay, from a structural point perspective, it doesn't leave much room, okay? Like it's if they're doing that, they're accepting that they could continue to break without stopping. Do you understand what I'm saying, you guys, or no? Think about it from a structural perspective, okay? Does that make sense? Like this. Do you see it? That's why if they just kept going, they could literally just get these big breaks. That's what's gonna that's basically what could give you like mass expansion scenarios, okay? So stalling there makes sense because they may not want to just fully push like that just yet, okay? Let me create a copy of this. Does that make sense? So them bringing it back here today, right now, like those are extremely calculated areas. And honestly, for healthier price action, I think that would be better because remember I said earlier last week that because we want to now look at adding at the 79 900s, they probably are just going to ramp it back another 100 points, which is exactly what they're doing. And the further and further they keep going up without ever digesting that area there, what could that cause? So if they just kept making this ramp, okay, what could this cause after? And this is where you have to kind of just remember things that didn't happen, that happened. And this happened in the past off a gap that we had in the channel and then had to eventually come back and refill it like months later. Could they not just drop us back at that point? Back in the future if they did something like that to here, to the areas that were never digested in between here. So it's kind of like, think about it for future PA and how this could basically play an impact. But I'm going to wrap up this session, guys. I hope this helped you understand ranges, range theory for the week, why the 7240s were an expansion area, why 730509 was potentially a max range for the week, because had they hit that, they could have triggered crazy expansions on the market, okay? Why they had a 5-point reduction, why they're pinning 7240s into the close, and how this could impact us heading into next week. I feel like this could help you make a plan, okay? And knowing that this area wasn't digested. So in my opinion, I think it would be better if we closed here and then digested here early start next week to avoid future volatility. Otherwise, the market could just keep going, okay? So, and you have to remember too that we've got multi-flips coming up. So the 4th is a multi-flip on multiple time frames. On the 7-day, which is also going to be a 4th bar. So this technically could be a reversal looking structure if that was the case. Some of these extend, like this one doesn't extend till the 8-day. Our 2-day bull flag, so that 2-day theory, usually you hit expansion, exhaustion off 3rd, 4th bars, so every 3 4th bars. So 1, 2, 3, they expanded 4. 5, 6, 7, slight exhaustion, and then continued. 8, 9, 10, this is an expansion period. 11 is where they could hit that period of, again, exhaustion, expansion between the 4th and the 6th. So the next few sessions are going to be very, very, very important, and it's specifically around a stall beneath 7305 and 7309 and a hold above 7244 to 48. Okay? And from there we can kind of decide if they want to continue another up to 13 bars, which I think we said was, this was 11, 12, 13, which was till mid-quarter. And that would kind of suffice that manual expansion that we, or manual measurement that we did here from these cycles. Okay? Or if they want to just come back and exhaust. But anyway, this was a really, really, really fun week to trade. I hope you guys utilized everything that was taught in here. And kind of even correlated it to other inverse sectors. So we had some really good runs on crude, okay, to our spots, especially that 107, 109, 110. On gold, I'll just cover gold real quick here. Gold had a really nice clearance break today, so keep gold on watch, guys, into next week. This is the first time since the clearance break back in January that we've cleared above that calculated level, okay, which is this 4,564. I lost my main gold template, but this is one that I had from a few months back. This is the area that's directly linked to back to the 4,900s, basically. So, again, gold has been a pretty... It's been a pretty interesting mover with ES because when you look at like an overlay of the two, they haven't been like exactly correlated with one another, but I would say that when we had some strength on gold, ES didn't really have much downside pressure, okay? And then we had the downside pressure more on crude, and that's more because the geopolitical risks that we've had factored in recently, but it is something that's worth paying attention to. I also had lost my template on crude, unfortunately, so I had to go back and re-add some of these. I found some of my old posts and just basically re-added these onto here, but we're in a interesting spot because basically crude did retest 107, 111, which is linked to the 119, 121 highs. Okay. Gold did clear back over 70, 46, 21, and 58. And ES, while it did break 72.88 and tag 7,300, it didn't quite tag 73.05.09. Okay, so we could be hitting a massive volatility wall coming into mid Q2 with multiple things kind of clashing now. Does that make sense? Like when you start seeing a clash of like inverted sectors, then that's where volatility could really arise, and I think that makes sense considering there was no digestive price action that took place ahead of this extra 100-point leg. Okay, so I'm excited to see how next week plays out, specifically with the 4th and 6th. 4th specifically, just because that's that first multi-flip, and then we've got that break on the 8th. No rate decisions this week too was another huge factor to us just continuing to grind up. Okay, and of course, any new headlines come out or anything changes in global markets, that's going to have a direct impact on the indices, crude oil, gold, etc. So, but this is it from like a time and price perspective.